Time is 6:15. Madam Deputy Clerk, I'm going to call this Audit Committee meeting to order. The Town of Aurora acknowledges that the Anishinaabe lands on which we live and work are the traditional and treaty territory of the Chippewas of China Island, as well as many other nations whose presence here continues to this day. As the closest First Nation community to Aurora, we recognize the special relationship the Chippewas have with the lands and waters of this territory. They are the water protectors and environmental stewards of these lands, and as a municipality, we join them in these responsibilities. We further acknowledge that Aurora is part of the treaty lands of the Mississaugas and Chippewas recognized through Treaty Number 13, as well as the Williams Treaties of 1923. Shared understanding of the rich cultural heritage that has existed for centuries and how our collective past brought us to where we are today will help us walk together into a better future. Council, can I get a motion to approve the agenda? Mr. Thompson, Councilor Reese, comments or questions? Call the vote. All those in favor? Opposed? That carries. Any declarations of pecuniary interest? Seeing none. One delegation, Shawn Deane, resident, regarding risk and surplus. Mr. Deane, welcome. You have 5 minutes, sir. The floor is yours.
Thank you. Good evening, Mr. Mayor, Council, and staff. I wanted to make comments about, well, actually my ask is after reviewing the detailed budgets and the audit report, I am convinced that we have the ability to lower taxes. And now that I have additional evidence, I would like to ask if there's an opportunity where we can have a public forum and a more detailed discussion about the actual facts and the detailed line items that would justify Councillor Gallo's motion to not have a tax increase next year. So that is my ask. In reading the budgets and the reserve, etc., and Councillor Gallo's motions and the newspaper articles on June 12th, Mr. Mayor, where yourself and other councillors sort of denounced this as being irresponsible and artificial. And I just totally disagree with that for many reasons. And instead of speaking in general terms, I would love the opportunity to have a detailed discussion about it, because as a resident, I'm concerned that we end the year every year with an operating surplus plus an aggregate total surplus. Reserve funds are there. The tax stabilization reserve fund has $6.5 million in it. To cover 2.9% increase only requires about $1.7 million. We ended the operating budget with 1.4 million in surplus. The list goes on with all these additional revenues that we have. So I'm not convinced. And knowing that our reserve funds were, 10 years ago only 60 million, now they're 130 million. They were 80 million for 5 years from 2014 to 2018. And during the pandemic, we had 100 million. In 2020, our reserves jumped 50%, almost to $150 million. So to say that there's not, 1.4 million for taxpayers, I'm not convinced. And I don't think there's enough people in the community standing up, defending our tax dollars. So I will continue to do this, and I want to, do this in the most respectful way with the facts. So the facts are here, and I just need a forum where, this can be discussed. And I just want to understand and have all these statements that were made in the paper convince me that we can't afford this. And I don't. There's reading everything in detail, and it's not, the way I would prefer to spend my time, but we have 1.5 million in new property revenue on average every year. The interest alone on the money is $6.5 million that we earned in interest on 133 million in cash in reserve. So this is, taxpayer money. And how. And you changed reserve fund balance policy to start using capital expenditure and using these funds before budget approval, which would happen before 2020. And for transparency, council has not provided a summary during the year of the capital budget, just the operating budget. So, there's another $20 to $60 million that, council isn't being updated on. So this is my ask and my concerns.
1 minute left.
Oh, and just reading this, audit report of today, you budgeted for, most of the items that were in the capital plan budget. You only used, 25%, 50%, 70% was the biggest use. All the rest went into reserves. And in November of 2024, just a few months before the end of the year, you reassess and forecast this, and you cut it in half, and then so I look at this, and you're over budgeting according to this document, and what's left over just goes into reserves. And I don't ask for anything from the town. And what I'm asking for now is a tax relief, and that would apply to everyone.
Thank you, Mr. Deane. Council, can I get a motion to receive the delegation? Councilor Gallo, second to Councilor Thompson. Any questions for the delegate? Seeing none, call a vote. All those in favor? Opposed? That carries. Mr. Deane, thank you for coming out this evening. Council will move to items requiring discussion. 6.1, we have a presentation by KPMG, lead audit engagement partner. I believe Maria's here. Maria, welcome.
Is it working? Oh, perfect. Thank you. Okay, thank you. Well, good evening, and thanks for having me here today. I'm Maria Kushnood. I'm an audit partner in KPMG's private enterprise practice, which is out of Vaughan. So it's Jane and Highway 7, if you're wondering where in Vaughan. I'm here today to present to you the audit findings related to the audit engagement of the consolidated financial statements of the town of Aurora for the year ended December 31st, 2024. What I'll do is I'll take you through the audit highlights page and some of the key matters that we have included in our report. And at the end, I'll pause. If there are any questions, I can address them at that time. So in terms of the status of the audit, at this stage, we've completed all required procedures that should be completed at this time. The only items that are pending and noted on slide 5 are items that are pertaining to the approval process, which is happening today. Once the financial statements are approved, we will be asking management to sign the management representation letter. And at that point, we will issue final on our auditor's opinion, and that will be attached to your financial statements. Our report today is as per the requirements of the Canadian auditing standards. So we will try to cover all the requirements that are required by CAS and communicate them to you. So in terms of some of the results, so there was no change from the audit plan that was communicated to the committee and to management. Our materiality that we calculated as part of our planning continued to be the same. Materiality, just as a reminder, was calculated at 3.35 million, and our audit misstatement posting threshold was calculated at 167,000. What that means is if there was any error or adjustment that was above 167K, we would have brought it forward in the presentation today. As a result of our audit, we did not identify any unusual or fraudulent transactions. We'll get to some of the procedures that we complete, but no unusual or fraudulent transactions or significant control deficiencies were identified as a result of our audit procedures. There were a few new accounting standards that came into effect, which I'll cover later on in my presentation. There was no significant impact of the adoption of these standards. All of these standards were completed. The adoption was completed by management. They made an assessment, which we found to be reasonable, and they were adopted with no adjustment to the financial statements. Now, going forward in the future years, the town will continue to have to evaluate the impact of these standards. As part of our audit, there was one corrected and one uncorrected audit adjustment that was identified. The magnitude of these audit differences, however, was not material, so they did not have an impact on the audit opinion. So our audit opinion for the town of Aurora continues to be unqualified and clean. Moving on to page 5. So here, there are some items noted that we had not completed at the time of the preparation of this report. They have all been completed at this point. The only pending item is the approval. Moving on to pages 6 and 7. So I'll cover them together. So pages 6 and 7 provide you with an overview of what we call significant risks of fraud. And these are not specific to the town of Aurora. These are required to be included in all of our audit engagements. We have included them in our engagement here as well. And we've listed some of the key procedures that we completed to address these risks. Based on the results of all of these procedures, I'm comfortable in reporting that we did not identify any sort of red flags related to management override of controls or to revenue recognition. So pages 8 and 11 provide you with an overview of some detailed audit procedures related to some other areas of financial statements. I'm not planning on covering those in more detail. They're there for your information. Nothing further to add on them. I'll take you to page 12 just to highlight the 3 new accounting standards I spoke to. So they're listed here. It's 3160's public-private partnerships, revenue standard, and intangibles. So they have been adopted without any adjustment. Very quickly, I want to cover the uncorrected misstatements. So we've summarized the audit difference here. Really what it is the town continues to improve the reporting of the tangible capital assets every year. There was some cleanup done last year. There was some that was done this year. The reason why we have this adjustment reported as uncorrected is because part of the adjustment pertains to prior year, should have been corrected in the past, but because it was identified in the current year, the auditing standards require us to report that opening impact to your accumulated surplus and tangible capital assets as an uncorrected item for the current year. But all the ending balances are correct, including your ending accumulated surplus, your ending TCA. Additionally, as a result of this error, we're required to do additional work, which we did. We spent quite a bit of time with management to try and understand the nature of this adjustment and performed additional procedures, and we didn't find any additional errors as a result. And lastly, I'll talk quickly about our audit quality framework. So our audit quality framework is very important to what we do. And the reason for that is because it ensures that we're meeting all the requirements of the Canadian auditing standards that are required to be met for each audit engagement. We've included a link to our transparency report here as well. If you're interested, you can take a look at more details. But essentially, the point of having a good quality framework is to make sure that we continue to deliver high quality audits. With that, I'll pause here. That culminates the formal part of my presentation. If there are any questions, I'm happy to take them.
Maria, I'll get you to continue if you'd like, and then at the end, I'll have everyone, if that works. Or you're done the presentation? You're done? Okay. Council recommendations that report number FIN 25035 be received, and 2, that the 2024 audit report and financial statements for the year ending December 31st, 2024 be approved and published on the town's website. Does someone want to move that recommendation? Councillor Kim, Councillor Thompson. Comments or questions to Maria or to the report? Councillor Weiss.
Thank you. I think you just covered this one, but I picked it up. It was on page 10. Is that where you're talking about the misstatement and the corrections? Because on page 10 of your report, you noted certain assets were not transferred out of work in progress to in service when they had been placed in service. Is that what you were speaking about, the misstatement, and that has been corrected? Okay, that's great. Thank you. In the audit committee report, on page 3, table 1 shows 2 different surpluses, and there's a note on there, and I'm not sure, it says note 5. I'm interested in why those surpluses are different, because it's just and I'm not an accountant, so I'm more interested in what questions may be asked by other people if I have to answer those kinds of questions. So I'm interested in, so for instance,
On which page, Councillor?
page 5, on the Corporation of the Town of Aurora Consolidated Statement of Operation and Accumulated Surplus.
Which report are you speaking to, Councillor?
The financial statement.
Yes, the next report.
Yeah, the next statement, sorry.
That's the next report. So we're still on
We're still-
6.1.
You're not, we're still on that? Okay, I'll come up with that later. Thanks.
Thank
I
you.
thought you were completed.
Any other questions on
No,
this one?
nothing more.
Thank you, sir. Any other comments, questions? Councillor Gallo?
Thank you. I think I'm in the right report. That's at page 6, page 3 of 6 of our report. And I mean no offense to anyone by this, but could someone in clear English allow the public and us, or me, I don't want to speak for anyone else. It's that first paragraph, and I'll read it, and maybe you'll understand my difficulty. Of note, the operating budgeted transfers to from reserves from amount of 16,077,400 represent contributions that are considered expenses or revenue under the town's traditional balance budget. However, under the public sector accounting standards, PSAS, in consideration that these transfers simply represent the movement of town surpluses, they are not considered to be true expenses or revenues, and therefore any net contribution to reserves of this nature should be removed as expenses from the calculated operating surplus, resulting in a larger surplus.
This
If
is right,
someone
Kessel.
could
Through you, Mr. Mayor.
simplify that.
So this is part of the 2 different types of accounting that we use. So for doing the financial statements, they're done on a PSAS basis, which is full accrual statements like any public and private entity does. And when you have expenses and revenues, they are recognized when they are earned or when assets or expenses are used. When we're doing our budget, we do it on a very different basis of accounting, and it's more about how we take the dollars in and how we plan on managing them throughout the year. And it shows for all the taxes, revenues, otherwise we bring in, where we plan on allocating them and how we plan on spending them through the year. One of the big differences between these 2 styles of accounting is when you get into the capital budget itself. So the capital budget, many of the things that we're doing in the expenses are assets. So with assets, we're in our capital budget, we're saying it's going to cost us $10 million this year. But when we look at it on the other form of accounting, we have to depreciate that over time. So that's why assets get treated differently under these 2 forms. Particularly for the reserve transfers, those are a lot of the funding entries that come from taxes that we've raised in the past or user rates that we've collected and that we're now allocating to capital projects. So we've already earned that revenue. So from a financial reporting perspective, it's a transfer of the accumulated surplus. So that's why it's treated differently. And it's all about that revenue recognition principle that's used for financial statements. That's why when we look at the budget method of accounting is a modified accrual basis, and it's much more simplified. It kind of marries up how much we plan on spending on a capital project in the year and how we plan on paying for it in the year. And it ties that cash basis together. It's more similar to how an average resident would manage their own finances. They look at how much cash they have available to pay for things as they go throughout the year and managing their own household budget.
Counselor.
Thank you. Maybe my hiccup is the term true expenses or revenues. You know, are there untrue expenses or revenues? That term doesn't make sense to me, through you, Mr. Mayor.
Ms. Maria Van Kessel.
Through you, Mr. Mayor. So it's based on the two different accounting principles. So for doing our financial statements, revenues are recognized when they are earned. So when we take in tax levy from the community, those taxes are earned in the year that they're billed. So we earn them in that year. But if we take those monies and we put them aside and put them into reserve, then they're basically sitting in our surplus. But if we use them in future years to pay for projects, that's not additional revenue. We've already recognized the revenue previously. It gets a little bit more complicated with development charges because they basically work the exact opposite way. So it is a bit complicated in how revenues do get recognized. And it's a matter of true revenues for the purpose of doing accounting under the full accrual method, where you're recognizing revenue when it is earned. So that's the key piece of when it is earned, or when expenses are incurred or now liable.
So
Counselor.
the true revenue or expenses are the ones that you earned within the fiscal year that we're reporting.
Ms. Maria Van Kessel.
Through you, Mr. Mayor, for the purpose of this report, when it's talking about the true expenses, it's speaking to under the PSAS version of accounting. So when they are earned or when they are now liable or incurred.
Counselor.
So in terms of math, it says 32, the annual surplus, 32 million, but we're speaking to the 16 million right now in terms of the transfers. How does the math work? Where does that 16 million? Well, it doesn't mean that we're subtracting the 16 million from the 32 million.
Ms. Maria Van Kessel.
Through you, Mr. Mayor. So that represents the net amount between taxes, user rates, et cetera, that is transferred to or from reserves, because this goes between our accumulated surplus. So it doesn't contribute. In the year that we collect them, they get recognized as revenue. So we have to take this, essentially the tax revenue we collect, and if it gets transferred to reserve, for example, for our capital programs, that gets recognized as revenue in the year that we collect it. So we do have some other transfers that are offsetting it, but this is the net amount overall that got contributed to reserves.
Counselor.
Okay. Clearer. Thank you. Sorry. Is this, no, it's not next report. Sorry.
Counselor Gilliland.
Thank you. Just a quick question through you, Mr. Mayor, to Ms. Wiener Van Kessel. About the deferred revenue drop, is that a red flag that we should be concerned about? Just seeing that we've seen a decrease in collecting these funds. Is that something we should be concerned about in our future projects?
Ms. Maria Van Kessel.
Through you, Mr. Mayor. So deferred revenue typically represents the use of grants and development charges. That's probably the largest components of deferred revenue. And we can only recognize deferred revenue from a full accounting perspective when that revenue is used. So it's like applied to capital projects, or it's used in the operating budget for grant activities. So we did have some larger projects last year, including Aurora Town Square that completed and the Sark Gymnasium. So a lot of that got applied to those projects. As far as the future looks, one of the key things that we do as part of the budget process is we do in the reserves and debt management chapter, there is that 10-year reserve projection. And what we develop is a revenue forecast for things such as development charges and other grants that we expect to collect, so that we can manage overall the money that we're expecting over the 10-year period and develop a capital program that is affordable, so that we can actually make sure we can meet the obligations that's within that plan.
Counselor.
Thank you. So I suppose then we'll be receiving a more of a grander snapshot this upcoming budget moving forward.
Ms. Maria Van Kessel.
Through you, Mr. Mayor, yes, we do an update every year when we take the latest information. And as you know, there have been significant changes to some of the development charge legislation. And we will be factoring that in our revenue forecast for how we're using development charges and funding projects.
Councillor.
Thank you. And just a question about the unadjusted misstatement. Is this something that's been a reoccurring accounting oversight through you, Mr. Mayor, to Ms. Van Kessel, or the delegate here?
Through you, Mr. Mayor. So one of the things we've done is we've improved a lot of the processes and how we've been managing tangible capital assets. And we've been digging into things a lot more. We've also got the new financial system in place, which gives us a lot more access to information and enables us to do much better and sounder analysis. So these misstatements that have been found were actually found by staff. We've actually made the auditors aware of what we've been finding as we've been trying to clean things up and improve our processes overall. Also, I believe about last year or the year before, we added an additional position that is working on tangible capital assets, and having that extra support and work within the finance team is helping improve our overall reporting as well.
Councillor.
That is good to know. I appreciate that. I did have another question, but it seems to have lost me here in my notes, so come around back to me. Thanks.
Anyone else for the first time? Councillor Gallo, go ahead. Second time.
Thank you. Just on table 1 of just above the paragraph that I read before, the first deduct amortization and accretion. If I'm saying that correctly, but it's a deduction of 24 million in amortization. So we amortize our capital assets based on a replacement plan. Are we saying that there's a gap that's developing between the capital depreciation and our reinvestment in the reserve funds?
Mayor Van Kessel.
Through you, Mr. Mayor. So the amortization that is here is based on the original value of the asset and the amortization rules that are applied to that asset. So it's a different length of time for the different types of asset based on the financial life of an asset. The work that we do on the replacement value is very different. So that's asset management work that happens. And then that's not really what you're seeing here. It's not based on replacement value. It's based on the original value of the asset when it was completed or purchased.
Councillor.
So we're budgeting to replace the asset when it needs to be replaced. I guess my question is there a gap that's becoming larger and larger in terms of what we're investing and what the asset will cost us once we need to replace it?
Mayor Van Kessel.
Through you, Mr. Mayor. So based on the original value of the asset compared to when we replace it, there's definitely going to be an increase in cost due to inflation over time. The asset management plan takes into account the fact that costs of assets are going to cost more, and they look at the cost of replacing those assets now, not based on the actual original value of those assets. So it does take that into effect. Part of the assets management plan also considers service levels. So depending on what service levels council is comfortable with determines how much needs to be contributed to pay for those assets, and also how much of the assets need to be done on an annual basis.
Councillor.
And just refresh my memory, when was the last time we did that study to determine the I think it's a 10-year capital asset?
Mayor Van Kessel.
Through you, Mr. Mayor, it was about a year ago that we did the asset management plan, and that came to council. I believe it was June or July of last year.
Councillor.
And we're using that guiding document when we're budgeting for any reserves that would go into capital asset replacement.
Mayor Van Kessel.
Through you, Mr. Mayor. So that is one of the largest inputs into doing our asset management plan, is looking at, or our asset management capital program is making sure that we're following what the asset management plan is identifying.
Thank you. Thank you.
Councillor Gilliland, second time.
Thank you. It was just really a follow-up from the previous question I had about the accounting error. So I just want to understand, just for the public as well, that although it was identified, it was not corrected. Is that correct?
Mayor Van Kessel.
Through you, Mr. Mayor, as Maria indicated earlier, it was an accounting error that would have impacted prior periods. So it would have impacted 2023 or prior, but 2023 was not restated. The values at the end of 2004 are correct.
Councillor.
Thank you. And is it from what I'm reading, it's from project expenses? Is that kind of what we're assuming? So it could be from Town Square or the SARC, from what you had mentioned before?
Mayor Van Kessel.
Through you, Mr. Mayor. So when we have our capital plan, not everything in our capital plan is classified as tangible capital assets. So what it's recognizing is there were items within the capital plan that had been identified as WIP, which means it would be a tangible capital asset for financial reporting, that were not actually going to create assets, that they should have been expensed in those years. So if it doesn't create an asset, you have to recognize the expense in that year.
Gotcha. Okay,
Council.
perfect. Thank you.
Councillor Gardner.
So, according to our last budget, it was in the budget that we're short in our 10-year capital asset management plan. So that plan is based on the current value of the asset. So that means if we have to replace something in year 9 of that plan, it's going to be most likely more than we've budgeted for in our plan.
Mayor Van Kessel.
Through you, Mr. Mayor. So when we are developing our 10-year capital plan, we do include some information relating to inflation, our best estimates. We do look at the different types of inflationary buckets that would apply best to the different capital programs, but we do try to apply some inflation. Depending on how good our estimate is, we'll determine what that gap is. But yes, the asset management plan was done last year, was based on last year's information. And again, it's a living document. It does get updated. And we do have the asset management team now in planning and development services in the engineering group that is looking at that on a regular basis.
Councillor.
Thank you. So our current deficit in the 10-year capital asset management plan is likely to be higher as it takes us farther down in the replacement of those capital assets. Am I understanding that correctly?
Mayor Van Kessel.
Through you, Mr. Mayor, for the current value of what our backlog and replacement of assets are, we would need to take another look at the asset management plan and do that further analysis. Part of that also it involves taking another look at the service levels and possibly adjusting some of those to be something that's more affordable or attainable as well.
Councillor.
Thank you. Service levels or taxes, as you said before. And do we update that plan every year, or it's 10 years and then we go back and in year 8 or 9 and do another one? Through you, Mr. Mayor.
Mayor Van Kessel.
Through you, Mr. Mayor. So we are looking at the asset management plan as being a living document. I know the engineering team is looking at it from an operational and engineering perspective, and we will be updating that on a regular basis. In the interim, like the shorter term for the asset management plan being the first 10 years, the capital plan is the best representation of what we are able to afford to complete.
I'm sorry, I didn't hear that.
The capital plan at budget is the first 10 years of that is informed by the asset management plan, and it indicates what is affordable for the town to complete.
Councillor.
Affordable means, through you, Mr. Mayor, affordable means we have the money in reserves for it.
Mayor Van Kessel.
Through you, Mr. Mayor, yes.
Thank
Councillor.
you.
Councillor Thompson?
Thank you. Through to Mrs. Wainwright Van Kessel, just to go back a little bit on the infrastructure and the gap, because there is a gap. I mean, in our asset management plan, we talk about the fact that the total value of our assets are $2.35 billion. And that even though we're putting money into reserves every year, there still is a gap. If we look at the long-term prognosis, that's why we're having those conversations around, you know, the various capital projects and increasing our cash to capital in future. And that's all coming. But that's not new for us. There isn't a municipality out there that I have not heard that doesn't have an infrastructure gap. That's why all the municipalities are lobbying AMO and FCM to try and get the federal government, the provincial government, to help contribute more to municipalities. It's been said multiple times. Out of every tax dollar, municipalities only get 10 cents out of every tax dollar, and we own 2/3 of the infrastructure in Canada. And so there is a gap. We need to figure it out, absolutely, and find a way forward. But let's not forget, we own over $2 billion worth of assets. Is that a fair statement?
Ms. Wainwright Van Kessel?
Through you, Mr. Mayor, yes, that's a fair statement.
Thank you.
Councillor?
That's it.
Any other comments or questions? Councillor Gardner, second time.
Thank you. But that means we're depending on the other levels of government to give us money. I beg your pardon?
I was gonna- the
Sorry, every municipality is looking at the provincial or federal government to give us money for asset management because, as Councillor Thompson said, it's just impossible with the taxes that we raise to cover that. I think that's just a statement. Thank you.
We have 9 minutes to finish 2 more reports. I'll let you go, but we gotta be quick. Yeah. I know you,
Oh,
you've been, yeah. Pardon?
Are we making a final decision or is there another opportunity to ask questions?
On
Is
this one,
council
we're
or
just,
committee?
we're approving and publishing it on the town's website. That's the decision we're making. We're approving the audit.
I have a quick question.
Go ahead.
It's fine.
Go ahead. I'll let you get your quick question. We got,
I hope it's quick.
I hope no one else comes on for a third time because I won't allow it. Go ahead, Councillor. Scott.
On page 66, notes the consolidated financial statements. It has an interest income and other in there. Interest income 5.1 million, other 4.3 million. The total in that category of the few others is 18.1 million. If we go to page 74, the total is there of 18.1.
Councillor, I'm just going to stop you. Which report are we talking to?
Yes,
I
the
think
next-
this is the next one. Because I see confused faces on the third attachment.
It's page 70. Well,
Okay, I apologize. I'm just trying to pull it up too.
you'll see where my confusion was.
Yes, okay.
Yeah.
There you go. So it's the draft audit report.
Yeah. So on page 74, it gives a description of those categories.
Okay.
Other, and the total at the end is 18.177. I'm trying to figure out how we distributed that 5 million plus in interest amongst those line items, which are general government, protection to persons and property. Now, unless we distributed them in some formula, the only one it could have went into is leisure and cultural services. I'm trying to understand how we distributed that interest income of 5 million amongst those categories. And what's the strategy? Sorry, maybe it wasn't a quick question.
I think everyone's just trying to make sure we're on the right page because even mine only shows we have 46 pages. So that's why I think that there's some confusion on which page it is.
Yeah, that's why I
Yeah,
thought it was part of the second
Yeah.
report.
Ms. Wainwright Van Kessel.
Through you, Mr. Mayor. So the interest gets distributed based on the type of reserves. So interest gets earned on reserves and depending on which type it is, determines how much interest income goes there. So there's various types of development charge reserves, asset reserves, user rate reserves, and it gets distributed among all of them based on the balances of those reserves.
Counselor.
But what strategy are we using? So if the balance is, if staff deems the balance to be low, we add more to that?
Ms. Maria Van Kessler.
Through you, Mr. Mayor. So it is based on the balance and distributing based on those balances. So for example, if the reserve's in a negative balance, it will actually get charged interest versus earning interest. If it's in a positive balance, then it gets distributed based on the balance of those reserves overall. So it's distributed based on, we calculate it as a percentage and then distribute it across. And then the reserves get categorized into these different buckets based on the type of service they're intended for.
Counselor.
And that other amount, the other of just over 4 million, where is that distributed? And what's the breakdown of other? It's over $4 million. Shouldn't we see a breakdown of what is generating that revenue and where it's being distributed? Combined, it's $9 million, over $9 million.
Ms. Maria Van Kessler.
Through you, Mr. Mayor, can you tell me what the
So it was the
page number
previous-
is of the
Yeah.
actual report, the attachment?
It's
Section 16.
It's page 66 of our agenda, 66 of 114. Notes to the consolidated financial statements.
So it's page 35. Third attachment, page 35.
It's 4.3 million in other, but there's no description of what that income is from or where it's distributed amongst 7 categories.
Through you, Mr. Mayor. So the other revenue is administrative fees and some of the fees and charges that are actually relating to the fees and charges bylaw.
So administrative fees and fees and charges bylaw, it's $4 million in revenue.
Ms. Maria Van Kessler.
Through you, Mr. Mayor, if you'd like, we can get back to you with a more detailed breakdown. I don't have it all
Sure,
in front
that's
of me
fine.
right now.
And just those 2 categories, and then how we distributed amongst the 7 categories, the 9 million, where that went.
Ms. Maria Van Kessler.
Through you, Mr. Mayor, with the fees, other revenue as well, that would get distributed the same method. Depends on the department that's earning those fees.
Yeah.
So we'll get you more information on what the fees are, and then it might make more sense as to how it's getting distributed to the different departments
Yeah.
or in the different service
That
areas.
chart there, it shows the 18 million and it shows, 10 million to
We're trying, Counselor.
leisure and cultural services and
35.
so on. Just a breakdown of that.
Ms. Maria Van Kessler.
Through you, Ms. Mayor, yes, we can get back
Thank
to you
you.
with that.
Thank you.
Thank you, Counselor. Any other comments or questions? All the vote, all those in favor? Opposed, that carries. 6.2, 2024 year-end operating capital results. Recommendations that report number FIN 25-037 be received for information. Someone want to move that? Counselor Thompson, second Counselor Gillen. Comments or questions? Call will vote. All those in favor? All right. 6.2. Any comments or questions? Seeing none. All those in favor? Opposed, that carries. 6.3, 2024 Aurora VIA audit report and financial statements. Recommendations that report number FIN 25-036 be received. 2, that Aurora VIA's 2024 audit report and financial statements for the year ending December 31st, 2024 be approved. Someone want to move that recommendation? Counselor Kim, Counselor Thompson, any comments or questions on this one? Seeing none, I will call a vote. All those in favor? Opposed? That carries. Motion to adjourn. Counselor Kim, Counselor Weiss, all those in favor? Opposed? That carries. We are adjourned. We just need a couple minutes.